Good. How you doing?
Good, man. How was your weekend?
It was good. It was good. We finished up the fall season with Baller Tights, the company I'm working with, training company. I got CJ in basketball, so we finished that season up. So it was good. It was a good weekend.
Beautiful. So, what's this company that you're working with?
It's called Baller Tights. It's basically it's my fiance like best friend.
Oh,
She
wow.
does.
Okay.
It's like basketball training, and her dad built a gym in his backyard.
That's amazing. So you're a trainer for them. You were telling me
Built
this
a
a few weeks ago.
yeah.
That's awesome. Good for
So
you,
it's
man.
yeah. Thanks, bro.
Has that been like a main focus for you instead of like training people?
Um, I think anytime basketball training comes available, I always jump in because, that's what I'm most familiar with,
It's your
most
specialty.
comfortable with. Yeah, so anytime basketball training, I'm gonna hop on it. But, I'm still in the fitness world. Like I might be changing my job and working at this fitness center in Georgetown. So
Instead of
I'm
driving,
just
instead of teaching.
teaching.
Let's go,
Yeah.
dude. I think that'd be awesome for you.
I'll just be a personal trainer. So hopefully they call me back.
Okay. That'd be an interesting move. That'd be awesome.
Yeah.
Good
My
stuff, man.
schedule would be much better too.
Yeah, 100%. I bet. And but like you'll be in the gym all day long. Like that's
Yeah.
I've in the past back in college I've thought about doing that kind of like as a some kind of a side job or something like that, just training people. And I've always looked at either trainers or specifically gym owners. I have a buddy that's a gym owner. Like you just hang out at the gym all day long. Like there's definitely a little jealousy in that.
Yeah. Yep, it is.
So
That's why I was just like being in the gym, having that good schedule in the gym and then just coming home, like that'll be perfect.
yeah. Yeah, but like you hang out, you got a desk there. You just kind of like you bring your lunch, you're eating, but in between you're training people, also lifting yourself.
Yeah.
I don't
Yeah.
know. It's just like a good environment of like healthy people, people coming in and out. You're meeting them and then selling them your training.
Yep. That's the ideal. And to be trading on top of that, that'll be,
100%.
yeah.
100%. All right. So, how was your week last week?
It was good. It was good. I took 4 trades.
Four
I had
trades.
3 winners, 1 loss.
Okay. Four trades,
Yeah.
three winners. That's good. How did you manage risk on the loss?
Um, I managed risk really well on a loss. I only lost $1.
Oh, wow. There you go. Were,
Um,
were you on the back testing session yesterday?
no, I wasn't.
Oh, okay. That was we're gonna be doing that more often. Don't worry about it. But we're
Okay.
also gonna get back to what we were doing last time with the back testing. I believe we did it every other weekend. I don't know why we got away
Yeah,
from it, but we're definitely
I
gonna
used to
be
love those.
I
Those
know.
really helped me. Those really helped me out. From sim
Yeah.
sessions.
Dude, yesterday I'm gonna post it on YouTube, but yesterday we only did one session of back testing, and then the other half of it was the full breakdown, fundamentally and technically. Um, but we did that one session, and the amount of things that we were able to talk about, and just some of the nuggets that we were able to drop just in that one session. We were about to do another one, and then we were like, I mean, we're gonna go another hour and a half doing this because it's
Yeah,
there's so many different things that we could have said, not holding back. Like it's just everything that we know. And I think it helped a lot of people out. But that'll be posted on YouTube. I'm still waiting on Charmer to send it over. But we also posted your episode
Yeah, I seen that. I seen that. I sent it to
Yeah,
a
just
couple more people.
threw it in the video chat over here.
Okay, okay.
Miles, what's up, buddy?
Not too much, man. What's going on?
Awesome. You have a good weekend?
Yep, pretty good.
Cool. What'd you do?
Getting through working through the just work through the some of the course notes, like the mental foundation stuff. So I'm done. I took some notes, I got like 5 pages worth of notes on that on the
Oh wow.
computer. So
There
then
you
I'll
go.
yeah, I was actually surprised. I didn't even know. Like I was just going through it and I was like, oh shit, there's 5 pages worth of notes here. I didn't even feel like it. So
Yeah. Yeah, you just don't
yeah,
you look back and you're like, holy shit. Got a lot of
yeah, literally.
got a lot of stuff out of that. So yeah,
Yeah, exactly.
you might not have to go through the basics of Forex. I doubt, that's more for somebody just coming into trading, or maybe they're coming from stocks and they're just trying to understand what Forex is. That's more for
Right,
them.
right.
You might be able to just skip over that and go over to the advanced stuff in trading. Um, and once you get to, where it's like, all right, the only thing I have to watch is the back testing sessions, then you can let me know and we'll get on top of Zoom and get your trading plan together and all that stuff.
Okay, sweet. Sounds good.
All right. So I don't know why everyone's it seems like everyone's sleeping in over here on
Yeah, looks
Monday.
like it.
But here comes Carlos. Guys, keep in mind this is gonna be a light week, right? Up until Wednesday, we might have some nice volume, but also keep in mind Thursday and Friday is going to be Thanksgiving, and the volume is going to be very low on those 2 days, obviously. So we're not going to be trading Thursday and Friday, but we have everything up until Wednesday. Which Wednesday we have a pretty eventful day. We're going to bring Forex Factory up. Carlos, what's up, buddy?
Hey, what's up, man? Good morning.
Good morning. I talked to you yesterday, so I know you had a good weekend.
Yes, sir. Yes,
Other
sir.
than that Saints loss.
Yeah, unfortunately, man, third string quarterback not doing too well.
Nah, I didn't get to watch the game.
Yeah, he threw 2 picks, but I mean, he threw 4 interceptions and 2 picks, but still lost by 11.
Damn, that's not good. So I got you guys in here, so I'm gonna just start with the weekly breakdown over here. So couple things to recap from last week. Last week was retail sales week, right? Same thing. We had a lot of earnings coming out for department stores as well, but we had earnings coming out, which is good. And what you want to focus on is the fact that they're coming in during the holiday season. So yes, it's good news that we have good retail sales for the holiday season. That was pretty much expected. But at the same time, you also got to understand it is the holiday season, and does that reflect if the economy is actually healthy or not, right? So like you got to ask yourself, would we be getting those numbers if this was August, or if this was March, right, of next year or something like that? So just keep that in mind. So last week was retail sales. You had big department stores, Home Depot, Macy's, Walmart, all released their earnings, all very good. Surprisingly, a lot of these department stores are doing good, and I think it's online sales that's a big deal. But it's just a healthy sign for our economy that a lot of these stores are doing pretty well. Big staples in our community: Home Depot, Macy's, right, the biggest department store in the world. Walmart's huge, so just keep that in mind. We also are waiting for Biden to announce his Fed chair replacement. Is he going to keep Powell, or is he going to replace him with somebody else? Now, this adds some uncertainty into the market, right? If you don't know, it could be Brainerd, it could be a handful of different people, but some people you really don't know their history or where they're going to end up leaning. So that adds uncertainty into the market, and whoever controls the central bank can make a lot of moves and shake up the market, especially for the fact that we're in a situation right now created by the Fed. It had to be, because you had to print money to to support the economy because of COVID, but at the same time, like, do we really need to print that much money? You know, you could get into some of those things, but right now we have inflation caused by the Fed. Now they're trying to extinguish the inflation caused by the Fed, and it's a very tricky slope, because if they increase interest rates, they start tapering, you're gonna start to see the market suffer a little bit, and you're seeing it right now, where a lot of these markets right now are in a risk off mode. Right, you're seeing that the dollar right now is at a resistance. You're seeing that the Dow right now is reacting to all-time highs, and we're creating like this lower low formation over here. So consolidating factor, or we're coming down like in a bearish market. So we got to see what's going to be happening. Also, all the risk on currencies are all bearish, right? The Japanese yen, the dollar, the Swiss franc are pretty bullish right now. So people are putting their money into these assets. Also, you're looking at gold. Gold is on the move up. So it's just something that you got to keep aware of when it comes to the equity market, stuff like that. What's up, Stipe?
What's up? What's up, guys? How are you doing?
Much, man. So the last thing as well, Europe right now is about to go back into a lockdown. If not, they already are. You got Germany, you know, kind of hinting at it as well, but Austria is back in full lockdown. I couldn't imagine talking about lockdowns again, right? I feel like that was so long ago, but unfortunately, some of these European countries are getting hit, so they want to lock everyone down. That's their choice, but you just got to understand, some of these Euro countries right now are going to be taking a hit. So over here, if we're taking a look at the economic calendar, and also what we're going to be doing, Sharma and I did the full breakdown after the backtesting session. I'm posting both of them in the course, but I'll also send it into the Slack once she sends it to me. I'm just waiting on her. So we did all this, like in-depth breakdown, fundamentally, technically, all that, like we always do. So you'll be able to watch that back again as well. Looking over here, one day we didn't have too much, or we don't have too much, right? You just have consumer confidence coming out of the euro, and then we have the bank holiday in Japan, which shouldn't affect us too much unless you're trading Asian. But right now, you know, it's kind of irrelevant, because the Japanese bank isn't even open. Like they've already closed. So right over here, you just gotta pay attention to that. Moving into Tuesday, you have manufacturing and services PMI coming out of Europe, Great Britain, and the US. So that's tomorrow's going to be a good moving day, hopefully. So we may get some moves during Tuesday, but Wednesday, everything's kind of crammed into here. First of all, you start off with German IFO business climate. Obviously, Germany is the main economy coming out of the euro. You have prelim GDP coming out, unemployment claims, durable goods orders, right? For the dollar. Then you get core PCE coming in at 10 o'clock. So core PCE is I would say the main inflation data that the Fed releases, right? So this is going to be a big deal. Also CPI, PPI, people pay attention to that as well, but PCE is just about the main one. If you take a look at the calendar over here, or the folder, they'll tell you as well. Differs from core CPI in that it only measures goods and services targeted towards and consumed by individuals. Prices are weighted according to total expenditure per item, which gives important insights into consumer spending behavior. This is rumored to be the Federal Reserve's favorite inflation measure, but CPI is released about 10 days earlier and tends to garner most of the attention. So CPI gives you that little preview of what's going to be happening with PCE. I would say they're both equally as important, because I always pay attention to this, and you always get a nice little move from this too. So we have that tomorrow. Consumer sentiment coming out tomorrow. So we'll see where that's at. They're expecting the same as previous. Then we got crude oil inventories. And then we got the FOMC. So Wednesday is going to be a firework kind of a day, especially with gold or some of our other pairs. But we'll see. We'll see what we get. But then Thursday and Friday, you guys are off. It's gonna be no session, only because it's Thanksgiving, and then Friday, there's not gonna be much volume. You're gonna have investors, bankers away for holiday. Visiting family across the U.S. and all that stuff. So we're not gonna have too much volume on Friday, right? But you got some data coming out. I wouldn't pay too much attention. This is where you guys want to be content, not taking trades and not trading. When you have holidays, when you have days where there's low volume and there's not going to be many moves, it's okay not to trade. Right? I actually just watched a video of these two, I think, multi-millionaire traders just getting interviewed. They're on a dock at their vacation home, and they take a decent amount of time off during the year. And then they come back, and that's just their style. I don't know if that's something I would want to do, but it's okay to step away from the charts a little bit, enjoy time with family, balance your life out a little bit, but also just make sure you're coming back full force, ready to go for whenever you are ready to come back. But that's a while from now. We all got more goals that we got to reach before we can relax or take it easy a little bit. So moving over here into the charts. Can you send that interview? Yeah, absolutely. Let me actually do it right now before I forget. It's a pretty cool interview. They're just kind of shooting the shit back and forth. And I didn't even mean to watch it. It came up on suggestions too. All right. Sending it into Slack. They bring up a lot of good points. It's going to be in the videos chat. They bring up a lot of good points about how you can't be focusing on money right now. And the more you do, the more you're going to lose, right? So it's all about skill. Everything that I talk about, just build the skill first, and then everything starts to come after that. So let's get into the charts over here. GJ, obviously, you guys probably know we're ranging a little bit in here still. But looking at the weekly, right, we've finally come, not finally, but we've come all the way down here, corrected this whole entire candle right here, right? Just mirrored the whole entire thing because this was consumer sentiment coming right back up, thinking that the Bank of England was going to increase interest rates, right? That ended up not happening, but that was until down here. So up here, buyers took out their profits from 158,200, ended up rejecting, and we were kind of ranging in here until that data came out, or until the Bank of England came out to announce interest rates. They didn't increase them. We already passed the low of this candle, and we just tanked all the way back down to these candle body highs over here. So right now, also, if you look at the monthly 156 over here, we never closed above. Kind of closed above, barely. But we ended up rejecting it, which is the more important thing. So I'm actually going to move this right here just because it's better to see the that 156 level is such a strong level right here. So right now we're rejecting it right now. And also the world is going into a risk off mode, right? So just because we're holding a support right here on the weekly doesn't mean that we're going to hold this and continue right back up. Are we bouncing off a multi-year downtrend right over here? Just want to point this out to Miles because I know he hasn't seen me break down the full GJ trade, full GJ. You'll see me doing that, but this is a multi-year downtrend that we've been in over here, right? Tapped right into this area, and then we reached that key level right over here on GJ a while back once we reached 156. So we ended up validating that bearish trend. So now with the rumor that interest rates were going to increase, we ended up making that move right back up to 156 and then eventually 158, right? But now we're coming right back down into this key area right here because it meets up with the COVID bullish trend and also the multi-year downtrend that we just broke, and we could be forming a support right here anywhere in this area to then drive right back up, retesting the high and continue up if they do increase interest rates. But they said that they're probably not going to increase interest rates until February of next year. They could be doing something next month if they get some more data coming out of Great Britain that's convincing for them. But right now, I wouldn't hold your breath. I think they realized that they did that a little bit prematurely, what they said. And if you've been paying attention to the Bank of England and Boris Johnson the past 2-3 years, you'll know that they'll say something and then they'll end up retracting it and delaying things. Brexit got delayed way too much. Every time Powell would, or not Powell, but every time Boris Johnson would say something, it's just like, all right, well, he's not going to be doing that until next month or the month after. Like that's where you were at when it came to what they would be saying. So that was no surprise to me that they didn't increase interest rates, but to most people and investors, bankers, that was a big surprise. So that's why you had that tank. So right now, like I said, don't be surprised if we continue right back down. This doesn't have to hold up. We do have a nice bullish candle closing right over here with a wick to fill, right? So we could be pushing right back up. But again, we got to trade what we see, not what we think. That's what we went over all day yesterday. Looking at the daily over here. So the daily, you guys remember us being in this range right over here. And that's where I was telling you to stay out. There's no point of trading in that, other than like, I think there were a few moves in the beginning of this range that you could have gotten. Other than that, it's best to stay out of this, right? Because once we ended up coming right back down into here and realizing that we were sitting in a range, that's when you understand that nothing's happening with the Great Britain pound or the Bank of England right now. They're kind of stagnant, trying to figure out where they want to go in terms of, interest rates. Like everyone's trying to figure it out. Banks are grabbing orders. That's where we're consolidating here. And then we ended up breaking out over here. And that's what I was saying to wait for, because you got the clean move right here. Instead of trading in here, where you have the small bodies and big wicks, and it's just sideways action, you wait for price to break that area where you get the clean move right here. Price came up perfectly to this previous support over here, and then ended up rejecting. As you can see, where we ended up dropping below the 200 EMA, which we were kind of hovering above. We dropped below it over here in this consolidation, and then we came right back up to retest it and hold resistance up here. So if you want, you can always draw this resistance right there. You got a previous area where price is reacting to that price point as well. It's also a psychological point, 154,500. So we're holding resistance right there, and now we're back into this range, right? That doesn't mean you can't trade in it, because what happens? Could this be a fake out over here? We'll move this right back up. You guys know about 156 over here, but since reaching 158, we've been in this bearish trend. We've been respecting this bearish trend over here. Lower lows, lower highs, creating this support, coming right back up to retest that area, and then we get the fake out to continue down. Are we going to continue down and retest this low, this wick right down here, and then continue through that support? If we do, where are we heading? Right? If we do, are we heading for this level right over here, or potentially this level right down here, 159.40? Right over here, you got the clean move. But once you get into here, you might be able to get a nice move over here. We'll see what it looks like on the lower time frames. But again, we ended up printing this low over here, and now we're kind of consolidating in this area. So what do we want to happen before we take a trade? First of all, I am looking at sells. We could very well continue right back up, but the way this candle printed with the low and us coming up to retest this area, my first bias, I would say, would be sells, right, to retest this low down here. Plus, the market's in a risk off environment right now, so I could definitely see this continuing to fall a little bit. Don't be surprised if we continue to consolidate the rest of the week, or for the next couple of days on GJ as well. There's not too much data coming out. Bank of England's not doing much, and then you got Thanksgiving week, so it's it could be a very light week on GJ over here. And this is something Stipe and I went over yesterday. It's okay not to trade. It's okay to sit there. I mean, not look at the markets at all, but to pay attention to what's going on. But being able to sit on your hands, or just sit back and relax and just watch price move. And if it moves the way you want, then you're able to take a trade based on your plan. And if not, if you don't get what you want, you're not going to be taking a trade. You got to be completely content with that. And I believe they went over that in that video that I just sent into the group. So more specifically, we're ranging right in here. I'm looking for a break of this level right here. You can also extend this to the left. And this is all trading is. It's just waiting for levels to break. We want to get out of this consolidation. And we know that if we close below, there's a chance that we could be continuing right back down. You got this wick coming down here. You're kind of a clean candle right here, right here. I think we could continue right back down. But based on the 4 hour, we won't keep moving until we break the possible buys down. But if we break this resistance, you get a clean move here. We could possibly do the same thing we did right over here, right here, where we break this resistance, get that retest, and we start coming up, but we end up retesting this level right over here, tapping into the bearish trend line, reacting to it, and then continuing right back down. Or we end up holding this support right here, where we start to break up, but then we start to break through this trend line over here, and then we continue right back up to this resistance, right? And then we could break that and continue right back up. So we need some positive things to happen with the pound over here. But again, we're in a risk off mode, and you're going to see people investing into the Japanese yen. So we load a chart over here. We get our indices chart out. Let's take a look at the Japanese yen. So dollar over here is still holding this resistance, right? Previous resistance up here as well. So that'll help us when it comes to the direction of gold. But let's take a look at wrong watch list. There you go. So right now, again, the Japanese yen is very weak, right? They have almost negative interest rates. So obviously you're going to see the yen tanking over here. But right now we are in this consolidation state. We very rarely, as far as like the recent past, we've rarely been in like a bullish trend on the Japanese yen. What we've been doing is forming a new low, consolidating for a while, and that's when you see GJ kind of tanking a little bit, right? Or we're in that bearish trend where then you see GJ rally, right? So just kind of keep it in mind out for these indices, and keep those at the back of your head. Looking over here, 1 hour, again, you want to stay out of this range. This is how easy trading is. This is how easy you can make it. You throw that there, and you throw this here. This is your range, 74 pips. I mean, realistically, we could very well come up here, which is still a good amount, 20, 30 pips right over here, which is a solid range to be trading in, right? If you're looking for 10 pips, you want at least like a 20 pip range that you could be trading in, because it's realistic to grab those 10 pips. Also, sells might be even better because we have a nice clean move, about 60 pips coming right back down to this low, this wick over here. Then if you want psychological number, 152,400 price could be coming into. So stay out of this, and then just trade this with the clean moves to the left. That's it. That makes sense, guys? We don't even have to go down to the 30-minute. It's just a mess where we keep rejecting it, As you can see, multiple rejections right here, right here. This candle ended up looking like it was coming above, and then we ended up rejecting it. And Stipe, this is kind of what I was talking about yesterday too, with like waiting for those breakout trades. Like obviously right here, we didn't have too much volume. We were just still in this range, but we ended up breaking out of here. And this is why I always say wait for candles to close above, at least on like the lower time frames over here, which it did on the lower time frames. But wait for price to close above because you could always get faked out like that. But we got it again right here, right? And we ended up closing bearish. So a lot of pressure on this resistance over here. But again, we keep rejecting this support as well. So everything's 50-50 right now. Plus, not to mention, we are in a higher time frame range over here. Everything's sideways, right? You get the EMA sideways over here and price kind of in between both of them. So just keep in mind, it's okay not to trade anything right now. And if we don't get anything today, we don't get anything. Is it boring? Absolutely. I want the action. I want the action every day. But I also have the power to tell myself, this is not worth trading. So I'm just gonna keep drilling that into your mind so that it's firm and it's unquestionable. Like in your mind, it's just like I'm completely content not trading if I don't get what I want. That that term just sounds so spoiled. If I don't get what I want, I'm not trading. It's if I don't get what's according to my plan and in my trading plan, as far as setups go, I'm not going to trade. If I don't get what I want, I'm not trading. Moving into gold over here. Gold bouncing off that 1875 level over here. Well, let me actually get rid of some of this stuff so we can really break this down. We don't have to get rid of this stuff, but as you guys know, we've been in this bullish trend for quite some time now. I would say ever since Trump was in office back in 2017, right? 2018, we had those Iran tensions. We almost had a World War III with Iran, China, Russia, specifically Iran with Soleimani and al-Baghdadi. And then COVID hit, right? COVID hit back in March 2020, and we just kind of skyrocketed to all-time highs. If you take a look at the market price action to the left over here, very similar, right? Then we entered this market recovery. If you remember, 2012, 2013, they increased interest rates, increased the value of the dollar, and we started to recover over here a little bit. Now, where are we? So right now we are holding a support. If you look at 1750 specifically, this previous support, multiple rejections, you got that resistance right here, but also you got these candle body highs over here as well. You could always move this up to right up here, but we're reacting to this level over here, and the most recent support over here that you want to pay attention to, that we are holding support right here before breaking 1830. Actually, let's go back to the monthly. It's a little bit better. After creating this all-time high, we've been in this recovery phase. Vaccines have come out. People have learned more about the virus. We're in that kind of consolidation recovery phase, corrective phase, coming right back down. Then we ended up having 2 months straight of really solid NFP numbers coming down after that little rally that we had coming up from inflation fears and also that conflict between Israel and Gaza, if you guys remember that. So, any kind of global tensions, especially in the Middle East, is going to send gold right up. So we ended up retesting previous highs before we get that positive NFP data that pushed us right back down to that support, which we ended up rejecting again, if you take a look. Also, with this bullish candle right here, ended up clearly rejecting this level, right? Then what do we get again? We get a second tap of 1680 over here from another solid NFP job. But guess what? We ended up rejecting and closing like a doji candle over here, but we still held below 1830. 1830 was a significant level over here. But again, we're still holding this support, and price is kind of consolidating in here. We finally broke out of it, right? With a clean move to the left, coming right back up to 1900, 1920. I would keep it at 1900 right now. So you get that clean move over here that we could be coming up and retesting. But right now, it looks like we're going to actually retest 1830 to possibly continue right back up. So we'll see what we end up getting. Looking at the weekly over here, I'll draw my levels. There you go, 1910. Previous candle body highs over here. We're going to mark off 1830. So we got that resistance right there. This is what I was telling you guys to stay out of. This is where, and I led by example. You guys saw that. I wasn't trading gold. I was good sitting at a gold, right? It's not worth trading in here. I think I was saying the other day, the only ways I would have played this range, and even, I barely would have done this, but taking this buy over here, right in the key area, you got a nice bullish candle with a wick to fill, taking this candle right here, and that would have been it. That's all that would have appealed to me. Taking anything here. Now we finally broke out, and now we retested the previous area right over here. 1875, if you take a look, and you'll be able to see this. I don't know why that did that. If you take a look on the lower time frames, you have the previous support over here, resistance, support, all in this area over here that price is reacting to. So I knew that we were going to push up, mirror this move, but we were going to get some sort of reaction in here. I thought we were going to keep pushing through it just because of the current climate around the global economy, but we ended up all actually reacting to that area, and then we're pushing right back down to 1830. But I do think we're still bullish on gold. We'll see. So again, looking at that area to the left, you can actually move this right here. You get that support, resistance now, right? And price reacting in this area multiple times. So you're going to get a reaction from that. Price actually ended up breaking the previous support over here. Right? So that you could possibly get this move coming right back down to 1830 with a clean candle to mirror right here, right? If you take a look, I'm going to zoom in a little bit. If you take a look at how this candle right here looks very similar to this one, right? And they kind of mirrored each other. Same kind of wick, right? Almost, and same kind of bottom wick as well. So now if you take a look, could we be getting something similar to this candle body mirrored coming right back down, right? Forget this wick, actually, like right over here. Could we be getting the same exact thing? So that's that area that you got to play. You may get a move on gold over here. Nice resistance. Take a look at that. This is beautiful. And this is the level that I was pointing out yesterday that we needed to break. And that's what we're breaking. Right over here, we started breaking at 5 a.m. And just kind of pushing down. So do we have a trade in play right here? Stay patient, right? You don't have to just jump into something just because you see a setup. But how can we play this right here where we could take this right back down to 1830, 1832? Looking at the 1 hour, getting a little bit more choppy over here, but nonetheless, we did start exhausting over here. Now we're putting these lower highs, right? We're starting to come down. You're starting to see the bearish pressure. You're seeing price below the 200 EMA here in the 1 hour. So are we holding this resistance, and are we going to push right back down? We got about 6 minutes left for the 15-minute candle to close. So we'll see any kind of levels that we need to break before taking a sell. But right now we are making these lower highs. So this is good. Looks like we may be retesting this low. But let's see what the lower time frames look like. This is cool. You got the 30-minute candle flipping bearish right here. Right? This 30-minute candle is flipping bearish. and we may be retesting the low. 15-minute. All right, 15 minutes, a little bit more choppy now. 15-minute, we're rejecting off of here. I think if we pass the low over here, or if we close below this level, if we close below here, I think we're going to be heading right back down. But again, right now we are making these higher lows on the 15-minute. We need structure to break over here for price to continue right back down. But I think if we close below this area, I think we should be heading right back down. Let's look to the left. Yeah, the left has a beautiful clean candle. If we get some volume today, this might be our move. I'm good staying out of GJ, but gold might be our play. Who specializes in gold in here? Chris likes gold a lot. What are you saying, buddy?
I was seeing the same thing you were saying, mirroring that sell candle, but I also I was looking at the daily, and if you go to the daily, there was previous 1840 was previous resistance on. I'm sorry, I'm walking right now.
No, you're good.
1840 was previous resistance on back in May. May 11th. It was resistance. You can see it on the daily. It went past 1840. It took a few days. So I mean, that's, you know, I was seeing that previous resistance. I seen that, you know, for a buy, it could pop if it created a 4-hour bullish candle. But you know, my top trade is that sell mirroring that all the way down to 30.
That's your main bias.
Yeah, that's my main bias.
Me too. I mean, I'm bullish on gold too, but there are these little scalps that you could take these little jabs at the market and make some money.
Yeah.
Take advantage of candles and stuff. I have that same level marked off. It's just, I think it's a little bit different. Like I have 45 just because you can see like how we react here. We react in this level right over here multiple times. So I had that right there. And as you can see, 45, if you go down to the lower time frames now, you had this support right here. Like this was the main support for the whole range, right? But you had this level right over here that you needed to break, especially with this wick too, before we started to come down. So that's where, if you look to the left, you get that reaction in here too. You see that? Instead of putting that on 40, I put it on 45. So it's really I don't want to say it doesn't matter. It does, but at the same time, it is kind of subjective. And however you see the market, you're just waiting for levels to break. You're waiting for candles to close, and you're being smart with the decisions you make. That's all that matters. So right now, again, we are breaking that level. Healthy bearish candles, right? We had that low created, right? Low doji candle come up, retest that level. We're kind of hovering above this level right over here, and this was last night when we were breaking the charts down. This candle was forming, right? So we were saying we're going to come up and retest this level, but we need this level of 45 to break, and that's what we got this morning. So looking at the 1 hour, again, healthy price action. It's, you know, smaller candles though. You're not getting like candles like this unless we get that volume around 8 o'clock to push us down. But so far, the 1 hour candle, 15-minute candle is closing in 1 minute, but the 1 hour candle is closing in 15. Let's see if we close like this, right? A healthy bearish candle. And then what you get is on the lower time frames, price closes below this area that I marked off. And the higher time frames start passing the low of that 1 hour candle. We get that impulse entry with the 8 o'clock volume, 8:30 volume, and we push us right back down. 1832. A clean candle to the left. So the 30-minute again is already created its top wick, and it looks like it's rejecting this area for the third time. All right, we rejected multiple times here. One, two, maybe the third time right here. All right, we are holding this low that we created. So you got to be aware. But I do think if we close below this level right here, we should be breaking through that with volume and continuing down. Miles, how you doing, buddy? Am I speaking gibberish or you catching on to everything?
Oh no, yeah, no, I'm 100% following. The only question I had was about GJ. On the weekly on GJ, because like the way I have mine marked up, I have like a pretty big zone from the weekly. If you look at, basically I have like my like my zone is from the bottom of the body, the candle body. So basically, so you see the previous weekly candle, not this one, the previous bullish one.
This one right here.
Yeah.
Yes.
So the only difference is, my zone is going from basically the very bottom of that body of the bullish candle to the bottom of the wick before that. Yeah, kind of like, so that's kind of exactly, that's basically what I have.
Okay.
And when I dropped down to the 1 hour and I was looking at yours, I liked how, because sometimes I feel like sometimes my zones may be like too large. But I like how with yours it was a bit more, it's more precise. So like when I drop down to the 1 hour, for example, if I do it, like yours actually coincides with basically the 1 hour, the bottom of the 1 hour candles, and the zone's not so big that it encapsulates some of the body. So that's the only thing that I was just gonna ask about, is basically if you see, just in general, when you see areas where there's multiple wicks that are tapping and you also have the candle body that's close to that wick, do you usually go with this? Does it make more sense to go with placing the zone where the wick taps are, as opposed to where the wicks are and like all the way up to the bottom of the candle body?
You know what's funny? The fact that you bring that up, and again, this is a subjective thing, but I see the market the same way where it comes to like drawing big zones, right? Like this, right? With the candle bodies with the wicks. I see the market like that. My problem is I've never wanted my chart to be so cluttered with zones like this. Like I agree, these are the zones, right? But again, like we don't have to clutter our chart so much with that. You keep it in your mind, right? And all you got to do to keep that in your mind is just waiting for levels to break. Like instead of drawing that zone like this, right? You're drawing it like this, and all you're waiting for on this time frame is for a price to close above that level, because with volume we'll push through these wicks, but you need price to close above that level on this time frame because you have multiple rejections over here, right here. So yes, you know altogether that this is the correct zone right here, right? But you need candles closing in this zone to push us through to continue right back up.
Right. Yeah, I know that makes sense, because I'm the same way. Like I've been, kind of trying to market up that way for a little while now, and I find those big zones sometimes it gets too much clutter in my head when I drop down to the lower time frames. I'm like, I feel like I don't know what the hell I'm looking at. So I know that makes sense. So that was my only question.
There's definitely times as a beginner trader where you'll either go through a losing streak or like you'll just I don't know really what causes it. This has happened a couple of times to me, but everything starts to get confusing on the chart, right? Where it's like, I don't know where to mark up my levels and all that stuff. Whenever you get to that point, just mark off the most recent support resistance, right? So most recent support and resistance, and that watching Raquel is right here. And then you got these two levels right over here. If you want to drag them to the left, you can, but it's not as important because the most recent support and resistance are the main important points, and price could be reacting to any level on the chart, any previous level. So you pay attention to those levels 100%, and you see me dragging to the left and all that stuff. But what I'm saying is when you get into that mode where you're just kind of confused of where to draw your levels, just pay close attention to support resistance recently, and that'll help clear a lot of things out for you.
Perfect. Yeah, that's honestly what I used to do, and then I kind of got in the habit of trying to break that when trying to incorporate some of the higher time frame levels. And I honestly just hearing that, that's probably where I think some of my confusion stemmed. Like when it did happen, when my analysis, I'm just like not going right. But yeah, I know, like I find it like I'm very comfortable with just placing the most recent support and resistance. That's what I initially started. That's initially how I started learning, and that's by far the most intuitive to me.
Yeah.
So yeah, no, that helps. I'm just gonna go back to that and just stick to that because I didn't really have any issues in terms of confidence, in terms of analysis when doing that. It was just a lot more intuitive. So yeah, I think I'll just I'll stick to that for sure.
Awesome. Yeah, I'm looking forward to hopping on our Zoom and getting into your trading and seeing some of your journals and stuff like that. Guys, Miles is the first person that we hopped on that initial Zoom. I was telling him, and he's the first person that actually already has that trading AAR, where after the session, he's writing down in a journal everything that he's thinking throughout that trade, throughout that session, and what he could be doing better and all that stuff. Like I didn't even have to tell him that that's a huge thing to do. So kudos to him. Has that been helping you?
Yeah, no, 100%. Like honestly, I was kind of slacking on doing that before, and I was always trying to make sure I do my journaling. But in terms of like how much detail I put into the actual words, in terms of where my head was at, and like basically just writing down psychological stuff as opposed to just the technicals. Yeah, that's definitely been a big help because I was in the habit before. For example, I'm over trading, whatever. I'm just trying to get off charts and just forget about it and not write anything down. And then I'm like, okay, I think I need to just start encapsulating that stuff too. So no, it's definitely been very helpful for sure.
All right, awesome. Yeah, it's like something that like sounds corny too, like writing to yourself and or not exactly corny, but just something that you just feel like you don't really need to be doing. And that's it's something that once you do it, you see why it's so important. So right now I am getting ready for gold over here. This level, we're starting to break down over here. So we're starting to break. Are we going to close below this level? We shall see. Unfortunately, I gotta use the bathroom right now. So we're getting some volume right here before 8 o'clock. So what you could do right now is possibly enter a dynamic risk, but this is only if you've been watching gold for a while. I'd rather wait for price to close below that level. And then what I want to do is the 1 hour is going to be closing in 7 minutes. I want to take the next 1 hour candle because I believe that we're going to create a top wick on the next 1 hour, and then we're going to pass the low of that candle. That's the trade I'd rather take instead of on the 15-minute waiting for this to just break that level over here. Hopefully it closes below, but I want to see that top wick on the 1 hour. Obviously, if we take it on the 1 hour, it's going to be a safer trade, right? So I think we're going to get that nice bearish close over here. Next one creates a small top wick, pass to the low of that one, and that'll be our trade. For some reason, my time is off on my computer and the 1 hour just closed. Which is kind of annoying. All right, so we created a top wick. We're passing the low of the candle pretty quickly. All right. So I didn't enter that because my magic keys is not working. What is this? 3. Is anybody looking to take this? I think I just missed it. What was that?
Yeah, no, I was. I'm actually in it. I entered as the low broke
Okay,
after the
cool.
top wick and the low broke. I'm in it right now.
Beautiful. I honestly, I think I missed my trade, just because I would have gotten it if my magic keys was working. I don't know what's wrong with them. Let me just put that on my to-do list. Talk to Gabriel. What? Let's see if this works actually. There we go. It works. Cool. I'm in. Now I have my stop loss. Somewhere around here. About 15 pips away. This is my target down here. But I'm definitely going to be securing at this wick down here. Anybody else in this?
No, I'm not.
Okay, cool. I see a nice little drop, but if price comes above 1839.94, that level that I was talking about, then I'll be closing 50. But let me I'm gonna run to the bathroom, get that done as quick as I can, and I'll be right back. All right. Sorry about that, guys. Looking at the 15-minute over here, or the 5-minute over here. I'm thinking we may be retesting this level up here and then continuing right back down. But I like these rejections up here. Nice little retest. We get that final tap up here with this candle. Then we get a healthy bearish candle. This candle created a top wick past the low of that candle. We should be continuing down and retesting this low. Yeah, it's a comfortable trade to be taking. How you feeling, Miles?
Good. Everything like I'm following it. It makes like the entry made perfect sense. To be honest with you, it's more like right now just kind of reverting back to how I originally started trading, and so it doesn't really feel like anything new right now because it's kind of how I started. So yeah, no, I'm definitely following. I think if the 5 minute, I'm thinking if the 5 minute closes back above that little zone that we have, then that may take some of my confidence away in this trade. But
Yeah,
yeah, we'll see. I guess
100%.
we'll see
Yeah,
how this closes.
that's kind of my my thought process here is if we close back above this level, I'll probably close the full thing or 50%. We'll see where how price ends up happening. But you just want to be fluid
Mm-hmm.
in the market and be confident with your thought process and your plan and all that stuff. So the main thing I want you guys to learn is just being content and calm in the markets. See, this is starting to go the opposite way over here. The 15 minutes flipping. So this is where I'll close 50% because now you're starting to get unsure about the trade. You're like, I don't know. Did we retest this low over here? And now we're starting to react to it. And we're going to be ranging in here. Like that could be happening. If we start seeing things that I like, then I can easily start adding more risk. Right. But now that we're starting to do this, we made this push. Now we're rejecting. Now it looks like we could be staying in this range for a little bit. Then that gets me thinking a little bit. Yeah, because see, if you take a look at the 30-minute, we retested the 30-minute close down here, the support, and then we just rejected. My stop loss is actually above these 15-minute candles here. And it just got stopped out. All right. So we cut losses at 50. We cut 50% when it was starting to come in the drawdown over here. Let me see if I open Magic Keys. Okay, so yeah, oh, that's perfect. I risked around I would say 100 pips and not 100 pips, $100 on that one, just lowered my risk a little bit, and I only lost around 45. So that was one of those setups where like everything made sense. Like all the time frames were lining up over here, right? We got the clean move to the left, nice strong bearish 4-hour daily candles, 4-hour as well. Beautiful move over here to continue right back down to mirror this move. 4-hour lined up. The 1-hour was looking nice. We got that 1-hour close. We waited for it to close. The next one created a stop wick and passed the low of that candle. A lot of times this plays out. Most of the time this plays out where we continue right back down with the New York volume. But right now, maybe we want to, this is the low that we ended up reaching. If you take a look at these candles over here, you got that nice move coming down, and then the candles start getting a little bit weaker, right? It takes a little bit longer for us to drop. So right now, we're kind of like respecting this price action. Could we be coming up here, consolidating a little bit, and then dropping when we have volume a little bit later? Or, as you guys know, with both of our pairs here, we're consolidating. Like GJ is consolidating. It's also Monday, so maybe we're not going to get a move today. There's multiple different factors that come into your trading that you got to pay attention to. But all these time frames really were lining up. So this is not a bad trade. You know that you're going to win this trade. If you take the same exact setup 10 times out of the week, you're going to win it probably 7 times out of 10. So you know that if you have this setup in your arsenal, this little break and retest, if you manage risk on those losses, you're going to be profitable at the end of the week after taking those 10 trades. I'm not saying to take 10 trades a week, but that's what I'm saying as far as, data goes and understanding probabilities. And that's all trading is. Like, you don't have to know what's going to happen to be a successful trader. You don't have to know what's going to happen next. You have to have an idea. You have to have a bias. But a lot of failing traders think they need to be in the market and know exactly what's going to happen next. That's not true. If you read Trading in the Zone, they talk about that all the time. Same thing with any successful trader you'll hear. Everything is based on probabilities. What's the probabilities if this 1 hour candle created a top wick, broke the low, or flipped bearish, past the low of that candle? What are the chances that we're going to just drop? Pretty high. The one thing I do want to point out, though, is that one thing that made me a little uncomfortable is the fact that this 1 hour candle created its top wick and then passed the low of that candle in the first, not even minute of the candle, right? The only reason I took that was because we did form that top wick and we passed the low, thinking that we're going to get the volume the whole hour of just kind of pushing down, right? But if this candle just ended up opening up at 8 o'clock and passing the low of that candle right away, I wouldn't have taken that trade. I would have waited for the top wick. So that's just, these are all little things that you add into your trading journal and also your AAR, where you're writing to yourself and telling yourself what you were thinking during the trade, why you took it, what you could have done better, all that analytical stuff to make sure that you're getting better on a daily basis. Every single trade, you're getting better. That's the mindset. Miles, how'd you handle your risk on that?
On that one, I don't think it actually closed. I think it stopped me up before I was able to close. I tried to close. Actually, no, I must have closed. Yeah, never mind. I actually must have closed a little bit earlier, but I closed 50% as the, let me just go back here, as the previous 5 minute high was breaking. That's when I closed 50%.
Right here?
After that, yeah.
Okay.
Yeah, that's where I closed 50%. And then I was just thinking something that I could take from it is, because for me, I'm not too comfortable with gold yet, but with this trade, was something that I was going to say, what I could have done is just been more aware of like that mini support on the 30-minute where price actually tapped into and then rejected. That's something that I could make sure to pay closer attention to next time on gold.
Yeah, no, 100%. What's it called? So yeah, you're just gonna write that in your trading journal and pay attention to it. Stipe actually sent this in on the 1 minute and how we're just creating these lower highs on the 1 minute. You could have come up to retest it and then maybe drop. So we'll see. I think we may be ranging in here for quite a little bit, but I definitely see the same thing, Stipe. So we'll see what we get. I'm content staying out of this range now, right? Like if you were gonna trade in here, right, with these wicks and candle bodies and stuff like that, this would have been the trade, and that's it. Other than that, I think we're done in this range, and we're just gonna sit back and wait and see what happens.
I'm staying out. This is
Cool.
a huge hell no.
Yeah. This candle created a higher low and a lower low, right?
Yeah.
That's the high and the low of the previous 15-minute candle. 30-minute candles all over the place too. That's good. Just stay out, be content, watching price move. We could revisit GJ real quick. GJ's again rejecting this resistance over here. So I think we may get a good move to the downside either today or tomorrow. And mirror this move, got about 70 pips. But that was actually my first trade on gold, I think in like weeks.
You got rusty.
What was that?
You got rusty.
I got rusty, yeah.
Yeah.
I mean, it was like I said, it was the one trade I would have taken in here. And with volume, 8 o'clock volume, we could have just, just tanked. Seen that many times. Especially like creating these lower highs over here on the 30-minute, right? Create that top wick, close below that level. The only problem is it barely closed below right here, right? I would have liked a little bit stronger of a close. This candle created its top wick, past the low of that candle. That's where we entered. And then we ended up retesting the 30-minute support down here. and then rejecting.
Yeah, I think that I guessed how it's gonna move in 1 minute, except it's another liquidity grab for an upside. But 1 minute kind of also 5 minutes confirmed it that it's bouncing off that trend line and dropping down.
Yeah. Yeah, look at that. Bouncing off the 200 EMA too. See, prices all over the place in here. And if this just drops, cool. Whatever, we'll study that for the next time. But, you know, taking that loss, manage the risk the right way, that's almost a win, right? When you take a loss, you're gonna take losses. You'll see that in that that video I just put in here. Losers make millions. These guys are pretty successful traders apparently. But they had some good insights and some good pointers for what they do and the way they look at the market. But you know, losses are part of the game, and the more you can embrace them and embrace learning from them, and also embrace managing risk during them, you're going to be a much better trader. It's a shame because it's such a nice move to the left that we could have easily just tanked with some of that 8 o'clock volume. Let's actually take a look at the dollar. Let's see, dollar's holding this resistance over here, but we also are holding some kind of a little support right here. So what are you guys doing for Thanksgiving? You guys, Miles, do you guys celebrate it up there?
Yeah, we do. It's in October.
Is it really? You guys already had it?
So, yeah, we already had it. Let me check the
Oh,
actual date.
you know what? I knew that. Reese, I remember when he was celebrating that. We got a guy in the group named Reese up in Canada as well. Actually, I got to find out where in Canada he's from, but I'll you know, you'll be seeing him in here.
Okay, yeah.
But yeah, I remember when he was celebrating. What was that?
I said, yeah, ours was October 11th.
Cool.
Over a month ago. Yeah, so early October.
And you guys, like when we had Veterans Day a few weeks ago, that was the same exact day Canada was celebrating something. What is that?
It's basically the same thing. We just call it Remembrance Day.
Okay.
Yeah,
cool.
It's literally that. It's pretty much identical. Like it's a tribute to the soldiers and that. But yeah, literally just a different name. We just call it Remembrance Day, but I'm sure it's probably the exact same thing.
Yeah. Do you have something with the with Memorial Day? Because that's two, like we have Veterans Day and Memorial Day. So I feel like Remembrance Day is almost more like Memorial Day instead of, maybe I'm wrong.
It's Memorial Day. I didn't even know that was related to veterans, to be honest. Is that what it is? Memorial Day?
Well, what I mean, it's, you know, if you have like people that have passed away in your family, even if they're not veterans, you're gonna go to the cemetery and go, you know, remember them and everything. But Memorial Day really is for like the veterans that passed away.
Oh.
So Veterans Day is
no,
also like, you know, thanking the veterans that are alive. Memorial Day is more of like mourning the ones that we've lost.
Oh, okay. Well then, yeah, and that, no, we don't have like a Memorial Day equivalent. It's kind of like Remembrance Day is, I guess, kind of like a combination of the two, where you're
honoring like a hybrid.
Those that exactly, yeah.
There you go. Good stuff. How are you doing up there? I know, you know, you guys are pretty locked down.
Honestly, right now it's actually not bad right now. There's no lockdown. That's a lie, not no lockdowns, but like, yeah, well, there's no lockdowns right now. But they have like a lot of restrictions in terms of the, you know, having to wear your masks inside the mall, inside wherever you get food, all that sort of stuff. But Yeah, no, I mean, it's a lot better than it was like a year ago from now. I actually took a peek at the cases when I saw that, when I heard you say that there's another, like Europe's, starting to have some lockdown. The cases aren't here, but there's no talk of any lockdown or anything. So I don't know. I'm not too sure what would happen if there's another lockdown. People would lose their shit, but
Yeah.
we'll see. Because a vast majority of people are vaccinated now, but obviously people are still getting the virus. But no,
Yeah,
it's
people are
not.
still getting it.
Yeah, no, for sure. I mean, I'm just glad that at least we can leave the house now, and it's a lot better than it was. So honestly, I'm not gonna complain. It's all right.
Here you go. Yeah. All right. So let's see. See if we got any news in here. Anything going on? Fed announcement today, as in Biden's pick. Yeah. The White House will announce whether it will nominate Jerome Powell to a second term today, according to multiple sources with the knowledge of the move. So this is going to move gold a little bit. And that's why I think maybe we didn't necessarily make that move down, right? Maybe we're just going to end up consolidating in here, anywhere in here until he makes that pick. We grab orders and then price just either skyrockets or just tanks. That nomination is something a lot of people have been waiting for. Just keep an eye on that. And there was no clear date of when they were going to do it, but according, I guess Monday of this week they're doing it. Let's see. Okay. Oh wow, look at this. The market is one more bad inflation report away from correction. So as I was mentioning during the breakdown, looking at all right, so this is our market right now. All right, this is the Dow, US 30. We created this high, all-time high, 36,000, and now we're in this corrective phase over here. Are we going to end up breaking this support, previous resistance, and coming back down into this range? Right now, if you take a look, what did I say was coming out on Wednesday? This is where fundamentals really start to come in, because it's the reason why price is moving. And the more you understand this, the more confidence you're going to have behind your trades, and the more you're going to be able to risk more. You're going to be able to up your lot size just of that pure confidence where, if you're just strictly technical, that's great, right? You're reading candles, reading wicks, you know how candles move, but imagine being 90% sure based on the setup and just technicals, and then having the fundamentals to back you up. That makes it so much better because you're that much more confident in the trade, and you can end up risking even more on that. So this is what we had coming out, or we have coming out on Wednesday. We have GDP coming out on Wednesday. We have unemployment coming out Wednesday, core durable goods, PCE, crude oil inventories, and also the FOMC. So we could get a hard rejection if PCE is bad. What are they expecting? 0.4. Okay. I bet this is, let's mark my words right here. This is going to be 0.6. And then that's going to send gold rallying. It's going to send the dollar down unless people keep investing in the dollar, because it's weird right now. Like, we have a lot of inflation, but the dollar is still bullish. And that's because people are pouring their money into the dollar, because the dollar, Japanese yen, and the Swiss franc are all safe haven currencies. So they take their money because you do business with the American dollar. So you take your money out of whatever other currency, you need to exchange it for the dollar to do business. Swiss franc has favorable interest rates and tax advantages, stuff like that. Japanese yen is the safe haven of Asia. So he was saying we could get that correction over here. But right now, we did make this peak. Let's see what we get. Yeah, man, this is I am not confident about our market environment right now. I think it's very weak. Obviously, we're just in a little corrective phase. We could very well continue right back up. Never bet against the Fed, but right now, the past week or two, based on inflation and the fears of inflation, we've been in this bearish trend over here. Then also, if you take a look at indices, go over to the VIX. Let's see. Traditionally, the VIX right over here, the VIX tells you, how much panic is in the market. So if this is bullish, this normally consolidates like this. It's kind of like, what are those readers in the hospital? Where like they take your vitals and then all of a sudden like it just flatlines. Is this like a simple term? Am I going crazy right now?
Like that heartbeat thing?
Yeah, like a heart monitor, I guess you could call it. So that's kind of how this thing moves. So the more it's spiked up over here, there's more fear in the market, and that's when you start to see the stock market take a tank, right? Now, traditionally, these are the two levels that you're paying attention to. When prices, closer to 30, then you're going to have a lot of panic in the market. When it's closer to 20, it's a lot better. Normally, it's staying in between here, but right now, this has kind of been a range over here, right? All the way down to like 1480. But just keep these two levels in mind right here, playing between both of them. Normally, the 20 forms the support, the 30 is the resistance. So right now, again, is this the 1 hour chart? Let's look at the daily over here. So the daily, we've had 1, 2, 3, 4 days of just bearish market over, panic over there. Actually, if you take a look over here, since holding the support, November 3rd, all the way till now, there you go. You get that right around November 8th over here. We've just been bearish, right? So that's just more panic. It's not going to look exactly inverted, right? But it is going to give you some hints. So that's an old chart. Wow, gold. Wait, hold on. So actually, to be honest with you, yeah, we ended up just getting stopped out. We could have put our stop loss up here. Maybe that would have been safer, but we still would have been managing risk and cutting losses short. But if we still do have that clean move to the left. If we close below this level over here, maybe retest it, we may have a move down. But I'm already content staying out of the market and not taking this. So we'll see what we end up getting. Gotta say that does sting a little bit, but that's gold for you.
Looks like it might start to melt right now.
What was that?
I said it looks like it may start to melt.
Yeah. Yeah, I'm looking at that right now. We got about 5 minutes for the 30 minutes to close. So being that I already took this trade over here, I want to see the candle close before I take something. I highly doubt this is going to tank all the way to 1832 before the 30-minute closes. So we may get that
And
top
wrong,
wick.
Stefano.
What's up?
I think your time is 8.
Oh yeah, yeah. For some reason, my computer's off. So the 30-minute already closed.
Mm-hmm.
This is the new 30-minute. Okay. All right. So let's see what we get over here.
1 minute was right.
5 minute.
One.
Yeah, 1 minute closed below.
No, my chart on 1 minute was actually right.
Oh yeah. Are you in it?
No. As I said, I'm staying away from 1 and
There
5.
we go. I was testing you.
Yeah. I'm not in it.
Good shit, man. Dude, listen, the next couple of days, especially this week, we got until Wednesday, but this is going to be the testing period, and it's going to be hard because naturally you're going to want to take these trades on the lower time frames and deviate from that plan. But just remember what I said. Most traders deviate from that plan within a day or two. Take it upon yourself to not be part of that crowd. And like this is everything for you. And you know what happens, when you stick to these higher time frames, you've seen a lot of success on that. And you know what happens when you drop down to the lower ones. You've seen some success with it, but it's not consistent. It's not, it's not going to last long. Make sense?
Definitely.
Awesome.
Maybe this gold trade should have been taken on 4 hour.
4 hours.
If you switch to 4 hour, you'll see the close below this kind of small range.
Well, it's passing these wicks and everything.
No. On the opening of the current candle, but with the stops above the not the first candle which closed previous, but the 2 candles before. Actually,
right here?
above this small range. Yeah, above that bullish candle, the second bullish candle. Yeah.
And what about this?
Maybe this could be taken on 4 hours on the opening of the current 4 hour candle.
Well, yeah, let's look at a couple options.
Intraday. Sorry.
Yeah, we could have taken something like this, where entering after this candle closes.
Yeah.
Could have taken this right here.
But that's a small stop for a 4 hour candle.
Exactly. We could have taken this.
Yeah.
Where this candle, we created that resistance, and this candle ended up passing the low of that candle, and we still would have been in it. You could have moved your stop loss down here after this candle opened, and then you grab this whole move. Yeah, so this would have been good to take around 5 a.m. And this setup on the 4 hour was why I was so confident with this trade here. But we needed to grab liquidity, I guess, to continue down. All right, take a look at the 1 hour. This is kind of what sucks about trading, but this is exactly what I called, right? On the 1 hour. I wanted this candle to close a strong bearish candle, this candle to create a top wick and pass the low of that candle, right? And we would have taken this move. Now, guess what? This is something great for you to add to your trading journal or your AAR. So you're going to write to yourself, at 8 a.m., what happened was we created that top wick, a small top wick, and at 8 a.m., we still passed the low of this candle right here. So within a minute, we created a top wick of what we thought was a top wick, and we passed the low of that candle, right? So writing that down, and then also writing down that we grabbed liquidity, and we ended up forming a longer top wick on gold, These are things that you want to write down so that you don't get caught in this again. The main thing that you want to focus on in your trading career is not making the same mistakes twice. This kills right here. I got to admit. Little FOMO creeping in just because we were right. Yeah, we were right about, just about almost everything other than the timing. We were right about the direction, right about what would happen on the 1 hour, the lower time frames as well. So does it sting? I'm not gonna lie to you, it never would. Of course it does, but you can't let that. What was that?
Sorry, I just said even 30 minutes close below this kind of small range and gave us a confirmation, but the current one just dropped down and that's it.
Yeah. We just wanted to grab more liquidity, and that's all. But these are things that you write down in that journal, man, and it's so powerful because the more you do that, the more you're going to start to see that you're not making the same mistakes, and you're also going to start to realize how bad the mistakes you are being made, especially when it comes to discipline. So it's so good with discipline. This is what we went over, Steve. Like, you're going to be making less and less mistakes over time, especially with your discipline, over trading, over risking, the more you write in this journal, which is what we're going to go over next weekend. So now we're rejecting over here, right? That's why you wait for candles to close. Could the 5 minute be creating that resistance over here? We shall see. Yeah, I don't know what's up with my time, but I may restart the computer. Stipe, you feel confident about the week?
Definitely.
Awesome. How about you, Carlos?
Yeah, I feel good, man. I actually, used the weekend wisely, and yeah, I'm ready for it.
There you go, man. Good stuff. Stipe, were you saying something?
Yeah, I wanted to say that I made the first step. I kind of avoided taking an entry in this 1 minute, even it was my perfect setup on 1 minute, but it's okay. I'm good with it.
So what that's another thing that you could write down is like I almost broke my discipline. I almost went against it. And I'm happy I didn't. Like stuff like that. Just write that in there. Even if you would have gotten the trade, whatever, that doesn't matter. Like you want to stick to these higher time frames because it's all about the long-term future of your career. And that's the number one way to ensuring success is sticking to these higher time frames because if you can use the same concepts and just be patient that you do on the 1 minute as you do on the 30 minute, watch how many trades you end up winning.
Yeah.
And
I didn't have a problem with avoiding this one. I closed my chart on my terminal with gold, and I'm just watching it on TradingView, and that's it.
Beautiful. That's growth right there, right? Now you just don't want to backpedal. You don't want to, have this good day today and then tomorrow you end up crashing or caving, not crashing, caving. This has got to be a everyday battle for you, but it gets much, much easier as time goes on. This is why we stay patient here and we wait for candles to close below or above levels. So we could very well end up ranging in here for the rest of the session. Same thing with GJ over here. I was saying GJ. I said this last night, saying it this morning. I think we're gonna get a lot of ranging on GJ for the week. I think our moves this week will probably be on gold. With everything going on, all the uncertainty and all that stuff. So might be able to grab some nice moves this week on gold, which is my first time trading gold at all today, but also, as a whole, my first time like trading gold, like focusing on it during the week, in a long time. Because if you take a look, you guys know me, and we were trading all together. I was not appealed by any of this. This did not grab me, any of this price action here. I was content staying in GJ, and that was it. But guys, with that, I'm gonna end the stream now. I hope you guys got a lot out of that. Got a nice little market breakdown for the week. Nice short week, but at the same time, we got a lot going on in the next 2 days after this until Wednesday. So stay buckled in, stay engaged, journal your trades, any trades that you've taken, just journal them, and then copy them over to the trading group Trello as well. Personally, unfortunately, I have not been able to journal my own trades as often. I want to do them during the live session a little bit, just because last week and the week before, I was my schedule during the week was all over the place. So I didn't get a chance to journal as much. So that probably contributed to the group Trello not being as prevalent. But let's keep that up this week, especially if we're taking trades, but especially the week after, where we're right back at it in that little boot camp that we need to put ourselves in before December 21st. Stipe, we went over that yesterday. After this week, we might get some good moves this week, but it's really like a holiday week, right? We have the second half of the week really reserved for family and stuff like that. And, investors aren't really involved in the markets. We get a lot of volatility, but not volume. So yeah, next week, you want to make sure that you're getting the most out of yourself from that Monday all the way until December 21st, 22nd, where we take that break off of trading for about 2 weeks before we come back around like January 5th, January 6th. And then we start cranking 2022 in usual fashion. All right, boys, you have any questions?
No, sir. Sounds good.
Well,
Awesome. Listen, thanks for stopping by. Great session. I wish we could have gotten that win on gold, but that's all good. As you guys see, at normal market conditions on gold, prices kind of all over the place in here. So I don't feel too bad about this. We manage risk well, led by example, like we always do, and we're on to the next trade. We learn from that one, we journal it, right in your trading AAR, and then on to the next session. All right, guys.
sounds good.
Sweet.
All right.
Sounds good.
Have a great day, productive day. I'll see you tomorrow.
You too. Bye.
Good, man.
See you, boys.
You too.